Timing is everything, and it is important to capture big trends ahead of the curve. Catch them young, as they say on D Street and Wall Street. My guest on the show today is someone who endorses this theory. As a firm, as a research house, they've been right in predicting the market tops and market bottoms. When Nifty cracked and went below sub 8,000, Quant Capital went on record and they said, this is it, it's time now to really shop. Sandeep Tandon joins me on this edition of Market Makers. Sandeep, fantastic to have you back and thank you for joining us. I have your latest strategy report with me, and let's just show our viewers the cover of the latest strategy report. Most hated bull market for the decade to continue. I thought the bull market itself was under question, given the earnings and the fundamentals we are working with.
See, why we call it a hated bull run? Because globally people have not participated in this rally. Okay, the rally or the bull market which started post 2008-9 meltdown, there was disbelief, complete disbelief, and even you ask me today also people don't believe. Okay,
that's not right. India is the toast of the town. It is the market of choice. Just about everyone right now is overweight India.
That's true, but I'm saying because people tend to chase prices, okay, so people tend to chase momentum, okay, but if you ask from their really hard, are they convinced about big moves? They are not, okay, and that's the reason if you look at this Greece related things are unfolding for last four years or rather 5 years, this drama is unfolding. Every time the news happen, people tend to react, okay, and our behavior data points are also indicating that people have not participated in this rally up to that extent. What is required for a bull run, okay? And that's the reason we keep on reviewing our target and says another 18 months, another 18 months is going on from 2012.
So let's talk about the recent rally or the recent recovery from 7950 to 8400 on the Nifty. 8 days on the trot, Indian markets have appreciated in a straight line. So for a near-term market watcher, do you think this is as good as it gets? See,
one has to look at from close to psychological level of 8,000. We have said that downside it could be 3%, okay, where upside could be 25 to 30%, okay. So if I have to look from a risk reward perspective, is 90:10. It makes sense, okay, and we are not talking about just 1 month or 1 quarter sort of horizon. We are looking at for next 2-3 years. I think there's a structural bull run is there. Look at the data point which got changed in last 3 months, okay. The crude related advantage which people were looking at suddenly realized that crude started moving them, and lot of forecasts coming back again $80-90. I don't think the crude related things will unfold. Crude is the global downtrend sort of thing. In fact, if I have to look at 7 years view, 5 years view, I think crude is heading towards below $36.
So do you think we have a firm trading bottom in place for this year, which is closer to 8,000 on the Nifty?
Possibly, yes. Okay. In fact, I'll say the probability of breaking 82 also looks remote now. Okay.
Why do you say that? Why are you confident that 8,000 or for that matter 8,200 on the Nifty will not be tested?
See, when I try to assess the behavior data points, okay. Look at the downgrade which has started, okay. The people who turned bullish post June 2014, post Modi phase, and everybody who has upgraded India, people are very bullish, okay. Look at right from March onwards, okay, when market started correcting, and at least I have seen 7-8 big strategists have downgraded India, okay. People are talking about significant cutting the estimates, and people have given up. So like buying on dip strategy, which was working for most of the houses, has become now silent rallies. Okay?
Is it true?
Up to large extent true. Okay. People are confused if you ask me.
But domestic institutional investors have been net buyers. We may look at FI data in isolation and say that look, they are throwing in the towel. That's not the reality. The net figure for FI investment in this year is still about $6 billion. And if I add what they've done in the last 3 years, the FI commitment is about $40-50 billion.
No, we are extremely clear that domestic guys are participating this time, which is actually a very good change.
The bearishness is not there.
No, bearishness, you don't look at bearishness purely from the retail perspective, because retail has missed out this rally for quite some time. So retail is coming back. They have not made money in precious metal. They have not made money in real estate. So money is clearly moving. When you talk about Indian retail guys, he's shifting towards equity side. That's the reason you are seeing the inflows towards mutual fund. But when I look at the overall picture, okay, from the FI perspective, hedge fund perspective, ultra HNI perspective, or even the HNI perspective also, there is some amount of disappointment because people build extraordinary leverage position right from May, June of last year. and which was peaked out somewhere in March of this year. So that's the reason we have seen a trading top happening in March. And in fact, in our January strategy report, we have talked about that market will make a trading top somewhere in mid-March, post-election, post-budget, okay, which happened. And now if you look at from a behavioral data are endorsing that bearishness is building up. And if I have to look at my behavioral data like bearish bet indicator we have at Quant for India level itself, okay, it's again trading a lifetime high.
Earnings are slowing down. We've seen in consensus earnings downgrade for FY16 and for FY17. Q4 numbers were nothing short of disaster, and I reckon Q1 numbers will also be slow. What is the case to buy into India? Because ultimately what investors want is earnings, and show me the earnings.
Okay. With that logic, I'll also where were the earnings in June 2014.
There was hope.
Okay, there was hope. Okay, so that's the precise reasons. Okay,
we saw a huge.
Okay, there were too much expectation built from the Mr. Modi, and that has people have given up that now. Okay, now if you really look at from the economy data for last 3 years, whether capital goods cycle, whether investment cycle, whether you talk about our excise related thing, FDI lifetime, all data points are suggesting things are improving. Okay, now it's not changing with the pace which market is looking at, but in last 3 months. It's changing, and in last 3 months market has corrected, so people have given up when ground reality has started improving. So I'm not expecting anything dramatic happen in this quarter, in the July result.
So last year it was too early to buy, and right now it's too quick to sell.
Yes. Okay. And
so on ground activity according to you has changed.
It has. It is improving day by day.
Point which will endorse your
Look at the capital goods data. Okay.
But
continuously.
IT data is a notoriously volatile data.
I'm saying then we can question mark on everything. Okay, I'm saying if I have to look at the data, last 3 months data is indicating something is change. Okay, and you look at even the capital goods and energy space, which is the 2 sectors which we have upgraded very recently in this report we have talked about. Look at the move you have seen in last week in energy.
So you are of the view, stop chasing consumers, don't bet on pharma. It's time to look at the other end of the spectrum, which is industrials and cyclicals.
Up to a certain extent, yes, you have to diversify a lot now. So we are clearly looking at energy and capital goods as new themes emerging for second half. Okay. Again, try to look at, we don't look at data purely on fundamental perspective. We try to combine the fundamental quantitative model and then give you an overlay of behavior. And then we also look at the much larger macro picture. From the combination approach, we try to spot the trends.
When you say energy, are you looking at oil PSUs? Are you looking at private energy stocks?
I'm looking at a combination of that. Okay, we are looking at private petrochemicals, we are looking at some of the PSU marketing companies also, okay, and we are looking at some of the energy related stocks also. Like look at the noise level.
Is it a good time to buy into commodity stocks, especially oil commodity stocks when the cycle is not with them? Reliance will struggle to make money, let's be realistic. They will get hit because the commodity cycle is not with them.
See, I completely agree. We have been very bearish for commodities for right from 2012. We have been talking very bearish. In fact, but I have a slightly different view. My view is that we have seen a trading bottom getting formed in crude. Okay. And I believe that by end of third quarter, you will see a trading bottom happening in both precious metal and base metal. In fact, this strategy report we have talked about that we expect gold and precious metal to make a bottom. Okay, so which means I expect a sharp fall happening in next 1 or 2 months time frame. Okay, that could lead to a basing formation for our trading commodities, also trading stocks and trading countries also, commodities country also. Maybe that's the reason I'm saying start building up. Okay, so if you want looking at buying pure commodities, metals place, clearly answer is no.
But buy oil stroke energy related stocks.
Because crude has already bought out.
And private players and PSU
No,
players.
Crude has definitely bought out. We have talked about it in January report around 44 level, crude has bottomed out. I'm not expecting crude to give a big move. So my target is like 53 to 64 levels.
News for OMCs, isn't it? If crude goes up, you don't know whether deregulation in fuel prices will be implemented. So far, it's working on paper.
I don't think this government will go back on any of these commitments. Okay, so I think that worry should be ruled out. Okay, from a longer term perspective, and they have performed also. Look at the move which HPB, PIOC, all this whole sector has given. Okay. Which is endorsement of the policy which is implemented.
One very valid criticism for the current administration is that they have not tackled the NPL problems for banks very clearly. There's no plan in place. The budgetary allocation for PSU banks recapitalization could be changed. As of now, there is no clear evidence that NPAs will recover, and some of the PSU banks honestly don't have the balance sheet size to lend. So even if economy recovers, how will they grow?
So I agree, that is the very weak spot. Both export and the NPA related challenges are there. Okay. Now, but you have to look at also, for any new government, it takes time to make changes. And even if you look at Mr. Rajan is putting a big effort. Okay. I think from RBI perspective also, things are improving. I think they are changing norms. Okay. It's a system which has been misused for such a long period of time, will take some time to change. Okay. And I believe that is where the maximum delta is. Okay.
So you believe that it's time to buy into PSU banks?
I'm positive on the
Can
PSU.
private banks underperform PSU banks, or they both will move hand in hand?
I think they both will move hand in hand. Maybe it's a question of few weeks, maybe the PSU banks outperform, and few weeks maybe private sector about. But I think as a basket, I'll look into.
What's your target for Nifty for this year?
We have maintained our target of 9,600 to 9,900 for the year, and that's the number which we have talked about.
Which means in the next 6 months, you expect the Nifty to appreciate by about 10% at least?
Definitely.
Our 9,600 actually more than that?
It's more than that. We have talked about 20 to 30% return can happen.
How will that happen?
Okay. So it definitely cannot happen without banking participation, because banking has the highest weightage. That's one of the reasons we are more positive on banking. And understand that changes which is happening in the economy, the effort which government is taking, which might be slow. Okay. Ultimately, banking sector will be the biggest beneficiary. The powers banking board which is getting from the RBI now, they can actually penalize the promoters. So this is the first time in this country there's a fear element of not to misuse the system.
So stick to the large PSU banks or shop in the mid-tier PSU banks?
That depending on the risk profile of the individual investor. I'll prefer to stick with the large names.
Just stick to 2-3 large names.
The top 3 names you can look at. Yeah, top 3 names you have to look at. Okay, rather than, because any FI buying will emerge, it will first come to the biggest name rather than getting into the smaller names.
A sector which you've liked and which you've endorsed in the past is the agri space. Yeah. Rallis has not done well, but Dhanuka Agritech has done extremely well. Yeah. As a house, you've been bullish on the agri theme.
We still maintain. So whether we talk about our fundamental team is still very bullish on PI industry or Dhanuka or United Phosphorus. So as a fundamental, we definitely continues to remain very bullish on all these streams. We never liked rallies.
Some of these companies are growing at only 15-17%.
See, again, when you look at the, and again, I'm going to repeat, when you look at, so we have to look at a combination. It was under-owned sector, okay. People didn't want to believe this space. When you talk about United Phosphorus, people talk about complexity in the stock or so many subsidiaries, and people have never participated. Look at from 120, whatever, 40 levels or say. Same situation is there in Reliance right now, okay. Disbelief is very high, grossly under-owned stock. Okay, negativity is on a peak. Okay, people have actually written off 70,000 crores of geo investment. Okay, look at the move which has happened. Okay, and if it continues or maintain also, people will be forced to participate because a large index stock, you cannot ignore it for long.
What role do you think IT stocks will play now? IT is no longer a crowded trade. Yeah. IT is no longer a popular trade. And IT stocks are now trading at historic lows in terms of valuations. I really don't remember when was the last time Infosys, or for that matter SCL Tech, was trading in a PE band of about 15 to 18 times.
See, despite that we have been extraordinarily bullish on NASDAQ. In fact, we believe NASDAQ has potential to outperform S&P and Dow also. Yesterday it made a new high. Okay. Still, we have a slightly neutral or negative bias for the sector. We always said it will be a market performer. It will not be outperformer. In January also we have been saying that going forward, irrespective of that rupee has depreciated, there is hardly any impact happening. Okay, I think it's the over-owned stock. Okay, people have hiding in this sector for a long period of time. They have delivered also. Okay, so again, from an over-ownership perspective, in fact, we have seen a trend where a lot of institutions are selling the technology names and they are shifting towards the energy names.
That makes sense according to you?
Yes, it definitely makes sense. And we are also promoting that part.
Play? Because as a house, pharma has worked like a charm for you.
We are still very bullish in pharma. Okay, so if you ask me whether trading top is also in place or long-term top, answer is clearly neither trading top nor the long-term top is in place. We remain very bullish. But if sector has given a big move, maybe tend to correct and consolidate. Maybe I think use the word consolidation much better than giving a big up move right now. So I don't think pharma will going to outperform immediately. Okay, but pharma will remain a market performer or outperformer for long term. Are you not worried
about the US FDA problems? They're going extremely slow there.
I think this was the problem. If you write from problem. But in last 1 month, you look at. This could
remain as a big problem.
This has been.
This will be a problem.
No, I agree with that part. But if you look at last 1 month data or last maybe 50 days data, approvals are coming as compared to first quarter or as compared to till what happened till month of April. There was hardly any approvals.
The pace of approval has slowed down significantly.
I agree with that part. But if you, very difficult to visualize what FDA will going to do, but if you talk to the industry experts, the sense which we got, it will gather momentum.
Your preferences, have they changed in terms of names?
Not really.
So you
Not
still
really.
like your old favorites?
Yes.
And just for the benefit of our viewers, some of his old favorites were Lupin, Cadilla, and as a house, Quant has been bullish on pharma, and they've been extremely, they've got it completely right. What about early capex beneficiaries? Companies like L&T, companies like Cummins, BHEL, will they also benefit?
They will also benefit, but only problem with these companies, particularly when I talk about that, they are not cheap at all.
So
it is expensive. But I'm saying, I think when you take a sector call, then I will look at the basket approach rather than having a very concentrated approach. Okay.
What will happen to consumers? Because that is only one sector which is still growing. FMCG volumes growth very impressive. What Jubilant Foodworks has reported, I'm very impressed with the pizza sales. Page Industries, there is no slowdown, at least in branded apparel. So the real growth, according to me, is still there in consumer names.
See, we are not denying that, but look at the valuation also. Okay, the valuation, Page Industries.
But good things come at a price.
Yeah, I agree with that. So I'm not negative. I'm not saying that it will start underperforming
what
from
would
these
you avoid?
levels.
Would you avoid a name like Page? Would you avoid a name like Jubilant purely because of valuations?
Jubilant I will not avoid because it's a very large macro call. Okay, from 2012 we have been saying globally food processing stocks will do very well, and they have performed very well. So it's a very large global theme which we are playing on food processing, and Jubilant qualifies very well for that. Okay, which is not true for Page Industry. Okay, Page Industry is a unique stock, okay, in its own segment. But the way you look at, I think valuations are pretty expensive. That does not mean we are bearish on the stock. Okay, we don't have a coverage first of all, and B, at these level, I think if you can prune down such names, okay, and move towards cyclical, some of the energy or capital goods related thing, you will get a better delta out there. Okay, so maybe after such a big move, Page might consolidate for some time, and when these stock gets into consolidation, sometimes they consolidate for few quarters, not few months.
So if given an option to invest now and invest for next 1 year, give me a broad sectoral allocation or a stock allocation.
So right from 2015, we are saying this time it has to be a very diversified portfolio. Okay, looking from a delta for a next 6 months or second half perspective, or maybe let's say when you can talk from a March perspective, March 2016, I think I like to increase my weightage for energy, which is under-owned, increase my weightage for capital goods, which in general model portfolio, most of the people are relatively under-owned. Then I like to prune a bit on pharma, prune a bit on FMCG. I'm still using the word definitely reduce my exposure on IT technology and technology stocks in a big way, particularly the frontline stocks. I see big out on
But
the
in general, your view is that time to buy now.
Yes.
And Indian markets have bottomed out.
Definitely.
Nifty will not go below 8,000.
I don't think so. Maybe another 3% thing, nobody can be so perfect. Okay. So we are talking about 2.5 to 3%.
But broadly, we have a bottom in place.
Yes, we think so. Bottom is in place.
It's time to shop.
Yes.
If you are of the view that economic recovery will pick up, then what role do you think utilities will play? Is it time to be a contra buyer in a NTPC, a Tata Power? Because tariffs would move up, raw material cost, which is coal, has been taken care of.
Okay. So I will look at, they will also move up with some lag. Okay. Right now I will focus on capital goods and energy, and with the lag effect, you will see action. I really don't see, at least data points are not suggesting for any big up move coming for the utilities name right now.
Let me qualify your definition for cyclicals. When you say capital goods, when you say cyclicals, do you mean machinery stocks? Do you mean IP related companies which have product engineering?
Let's break.
Companies?
No, cyclical obviously is a very broad based trend. Okay, so that's why I'm using specifically saying energy. Okay, energy is also part of cyclical in some manner. Capital good definitely. So we are specifically saying energy stock, which is
again,
clearly and capital goods.
Big.
Okay, within capital goods we are talking about stock like BHEL or KEC International or Siemens, Larsen. That's a basket which you are looking at. Okay,
largely power related capital goods.
Yes, you can call
what
it.
What about
maybe
road companies?
Road companies also we are positive, but again options are very limited. Okay, which is a big name in that
I
space.
I can count at least 20 companies.
Okay, but they're all very, always, and this is all the problem where balance sheet has trash, approvals are not happen. So they are not in a great shape. Maybe you can participate some of the names as a basket approach. Answer is yes. But if you ask me,
basket approach work? Basket approach means you're diversifying. You will get one right, you will get one wrong. One stock will not.
But I will say whether diversified also depending on the risk profile of people. Okay, some of the FIs will not get into that. They will say a large client of ours will only look at the very selected, maybe Siemens, Larsen, or maybe Adani ports of the world. Okay, where will come to the HNI, they will be very happy with the KEC International also. They will be very happy to look at the BHLs of the world. So maybe then talk about domestic institutions, they will be very keen to have a very diversified portfolio. So again, it's purely depending on the risk profile and the stocks which you like. Okay, so that's the reason we like to keep it slightly broad-based from.
Broadly, what's your understanding from domestic institutional investors? Because suddenly they are the price makers. They are not sellers. $10 billion last year, another $10 billion this year. They are the new FIs in the town.
I think definitely after a long period of time, we are seeing that when FIs selling has happened and domestic guys absorbed it. They have not only absorbed the entire thing, they have actually increased their allocation. I think it's a very, very healthy trend. And again, repeating, that's coming from the background, the retail has not made money. So
can I safely assume that when domestic institutional investors are the price makers, they will not chase pharma, they will not chase consumer names, they will chase stocks which are more close to the economy, which will drive the next investment
Not necessary.
cycle.
Again, depending on
That
the
theory doesn't
no, it's not necessary. I'm saying that depending on which type of scheme they manage, what is the mandate they have, and maybe the inclination of particular fund manager also.
What is the broad inclination?
The sense which we are getting right now from the domestic perspective, they are keen to prune down technology, they are keen to prune down pharma names and maybe try to increase exposure.
Consumer names.
Definitely. They have been avoiding consumer for long. Consumer have been an all-time favorite for the FIs, not for the domestic side.
What role do you think cement will play? Because if you are bullish on cyclicals, energy, industrial revival, ultimately cement demand has to come up. Some of the soft indicators and the high frequency data points are not indicating that true blue cement demand is back.
So we are positive on cement. Okay. Ultimately, if you are looking at infrastructure growth in this country, cement is something which is critical for that. But as of now, maybe starting looking at a large company, maybe Ultratechs of the world, but we are more optimistic on southern-based cement companies rather than the north and the east part. So maybe southern-based company looks good, or maybe company which have some scale. Okay, we are not saying that
cement companies,
because fundamental picture is far better. Okay, as compared to what is happening in the west or the northern part. Okay, slightly more weak. Okay, so we are slightly more optimistic some of these names rather than in general. But I'm again saying that we are positive on cement sector as a theme. Okay, if I have a 3 years view, then definitely I like to play cement.
Let's talk about autos. The widespread belief is that autos will do well because rates will come down. But within autos, there is a divide. Two-wheelers, there is an issue. Competition, B, agrarian economy, C, rural economy. Four-wheelers, there is no competition. As a result, Maruti keeps on going higher, higher and higher.
See, Maruti thing is slightly different, is based on the yen. Okay, the big move of Maruti or Mark2 has outperformed. It's sustained even this follows. So Maruti is not corrected because yen has continues to depreciate. Our view on yen is like 133 this year and next 145. So if I look at just assuming that all other data points are stable, and if I take call purely on yen, maybe Maruti should be 6,000 rupees. So Maruti call is very different from the domestic players. So obviously Maruti remains as a topic for us also for quite some time. We have been bullish from 800 rupees. Our fundamental analysts are also equally bullish. Okay, but when it comes to other sector, I think telco is struggling. Mahindra data points are looking good with the tractor, with agri demand picking up. Maybe Mahindra should be a beneficiary out of that. Coming to look at, if you want to look at the two-wheelers data, obviously they have beaten down significantly. So maybe a month back, both Bajaj Auto and Hero Honda has bottomed out. Okay, now they have already given a reasonably good move. Okay, whether that momentum can continue looks difficult, but I think the worst is behind them. Okay, so which worst may not be behind them in terms of your monthly numbers. Okay, but if I look at from the stock prices, I think worst is already, market will be ahead.
But your clear view is that 9,600 is coming.
I'm quite confident.
That's the most optimistic target on the street.
We have said in January also. Similarly, we have said last year also 8,800 is coming, and it happened. Okay. So again, I'm trying to say that don't try to look at this number in isolation, 96 or 99 or 95. Okay. What is relevant if India is a structurally positive story or the story which is unfolding, people have started believing from 1 year back. I think changes are happening. Changes are visible. Okay. So if I have a 3 years horizon, then I think a buying on dip strategy will continue for many people. It becomes sell on rallies, but I think buying on strategy will benefit if I have slightly long term. I'm not looking at just 3 months horizon. I have 3 years horizon, and it's a perfect opportunity. Market is giving another brilliant opportunity to rebuild your exposure.
So rather than running away from the market volatility or the sharp correction, it's time to endorse it. It's time to hug the fall rather than trying to take cover.
Definitely.
Sandeep, it's been brilliant having you, and I always appreciate the fact that you've got this uncanny knack of calling market top and market bottom right.
That's our passion.
So you've called you've called the market bottom right. I hope you really get the market top right as well.
Yeah.
Appreciate your time. Thank you for joining us. That's it on this edition of Market Makers. I'm Nikunj Dalmia signing off. Thank you for watching the show.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.